Driving markets and the economy, plus advice to investors on how to allocate your own money right now. Joining me right now is Portfolio Wealth Advisors President, Chief Investment Officer Lee Munson, along with Matson Money President and CEO Mark Matson, and Pacers ETF distributors Sean O'Hara. Great to see everybody this morning. Thank you for being here. First up, markets reacting to Moderna's positive results this morning from the vaccine clinical trials. This news is raising hopes for a quicker economic recovery and a vaccine sooner than later. Mark, it appears every time we get positive news on a vaccine, markets certainly trade up.
Well, we do, but I think if investors wait for a final cure to get into the market, I think they could be waiting a very long time. Remember that we've been looking for an AIDS vaccine for over 40 years. Even the annual vaccine only works about 40% of the time, and the viruses mutate. So I think investors have to stay long term, and so many people have been panicked out of the market. They need to be in the market long term. Don't avoid equities, and then you have to rebalance on the highs and lows. So my message to investors is don't try to time it, get in it right now, and stay in it for the long term.
Yeah, that makes a lot of sense. Meanwhile, earnings season is in full swing. Bank of New York and Mellon and Bank of New York Mellon and PNC Financial Services Group, along with U.S. Bank Corp, reporting in the last hour. Next, we are waiting on Goldman Sachs. Goldman will be out this morning. Lee Munson, what are your expectations here?
I don't think we're going to see a disaster from Goldman Sachs. A lot of people are concerned that Marcus might have loans that are going bad. But when you look at the JP Morgan, the Citigroup from yesterday, it looks good. And I'm never concerned about Wells Fargo because they always disappoint. I think if investors have cash, which we know, especially in the baby boomer generation, they're sitting on a pile of cash. Fidelity came out with some surveys a few weeks ago about how a huge minority were selling in March and are underinvested. I think you can buy things like the banks right now. There's all sorts of cheap things that are still on sale. Look at the energy master limited partnerships. You know, you can buy little baskets of that, ETNs. Those are very cheap right now. So you don't have to buy the NASDAQ. You don't even have to buy the S&P. You know, if you just want to buy something basic like the Russel 1000 value through a cheap ETF, I think you can do that now with a little bit more calm and confidence. That whole group is down, 10, 15, almost 20%. So I also think it's important to say, if this spread between the laggards and the leaders still get bigger and bigger, that's going to be bearish for the market. So if you have any type of optimism here, I think you look at what happened back in May and you get those cheaper, beaten up stocks start to catch up. So remember, you can see the NASDAQ hot stocks kind of falter here and sideline and see everything start to pick up the pace like we did about 6 weeks ago. I think that's a trade right now. That's how I'm investing new cash. Buy what's on sale. There's no harm in it. And the valuations look a lot better.
Well, Lee, what about Apple? I mean, this is one of those hot stocks that you're referring to, and Apple got a really big news this morning. A European Union court has decided that Apple does not have to pay that $15 billion in taxes. This is a big deal for Apple. Stock is up 2.5% right now, and that is why the Dow futures are actually stepping up into another leg up. We're now up 425 points. Would you buy Apple here on this news from the EU decision?
No, I wouldn't. Apple has some issues with not being able to really grow their revenues over the past few years. I would rather stay away from the general FANG stocks right now. I know that makes me very unpopular, but I still maintain the type of momentum you're seeing at that top end, those FANG stocks. I have more concern about that lacking the type of follow through between now and the end of the year. I mean, how's Apple going to start raising their revenue another 20% going forward? Everybody's stuck at home. Everybody's upgrading all their Apple stuff. Again, I'd rather buy what's on sale. But hey, I own the S&P. That stuff is in there. I'm certainly not selling my Apple holdings.
Yes, that's true.
But when I add to it right now, you just let that FANG stuff ride. It's it's 25% of the S&P. S&P is our main core holding. So you're getting all that stuff. I would rather commit new capital to what is, the banks are still down, 15 to 20%. Yeah. So that, I think, is more appropriate.
Well, the banks are down. You're right. Banks are down.